Do you know the statement date of your credit card accounts? Well, if you don't, you should. And in this video, I'm going to tell you why. Hi, my name's Earl Bridges. I am an attorney, a real estate broker, nationally certified credit repair and FICO scoring expert, owner of the credit repair company Restore Your Credit LLC, and author of the book Restore Your Credit and Live the Life of Your Dreams. Most people who have credit card accounts know the day that the payment is due, the due date of the account. But what I found over the last 10 or so years in doing credit repair is not a lot of people know what the statement date is. Okay. So the statement date is the day of the month that the details of that card is reported by the credit card company to the credit bureaus. So, they'll report the balance, the credit limit, whether the payment was made on time. Okay. So let me tell you a story to illustrate why it's important for you to know the due date of your credit card accounts. I had a client contacted me a few months ago and said, "Hey Earl, I'm a little concerned. Yeah, we've gotten a significant number of negative accounts deleted, and I paid off." He only had one credit card. And he said, "I paid off my credit card, but my score isn't really, it's increased, but it hasn't increased as much as I thought it would." So I said, "Well, Bob, I tell you what, let me take a look at your I'll log in, take a look at your your report, and then I'll get back to you and let you know what I'm seeing." So I log into his account, and what I see is his credit card utilization is at 70%. Okay, so I'm sure most people know. First of all, that there are 5 factors that scoring algorithms will typically consider when generating a credit score. One of those factors is your revolving credit utilization, and revolving credit, or credit cards, merchant accounts, counts of that type. Any account that has a credit limit, and as you draw down on the limit, the available credit goes down, and as you make payments, the available credit goes back up. Okay, and most typically revolving accounts are going to be credit card accounts, and in most scoring algorithms, that accounts for 30% of the score, and so it's obviously very significant. It's almost as significant as paying your bills on time. Okay, so. And I'm sure most people know, or if you don't, what you need to know is that anytime that revolving credit utilization, really, conventional wisdom is anytime it gets over 30%, it will lower your score. The reality is that whenever it goes up, whether it goes from 1 to 2% or 10% to 20% or 30% to 50%, whenever it goes up, it's going to lower your score. It's just a matter of degree and amount. Most people have heard that, well, you want to keep that score, that credit utilization below 30%, or it's going to lower your score. Well, yeah, there is some truth in that. You definitely don't want it to get over 30%, but the reality is that the optimal level is anywhere from 2 to 4% in terms of the achieving the highest score that you can get. But 70% obviously is way too high. Okay, so I contacted him and I said, "Bob," I said, "I thought you told me you paid this card off." And he said, "Yeah, I did pay it off." And I said, "Well, but look at the report; it's showing 70% utilization." And he said, "Well, yeah, I paid it off, but then I used it again." And I said, "Okay, but this is the problem. You used it, so." Let's lay out the scenario. He had a credit card. The due date was the 10th of the month. Okay, so on the 10th of the month, the due date is obviously the date on which at least the minimum payment is due. Okay, so so by the 10th of the month, he would pay off the account, but then a couple of days later, he would use it again. Okay, well, the problem is that the credit bureaus don't report the details of the account as of the due date. They report the details as of the statement date, and the statement date's typically going to be 3 to 4 days after the due date. And in his case, the statement date was the 14th of the month. So his payment was due by the 10th, but they reported the details of that account on the 14th. Okay. And what was happening is that he was paying off the account on the 10th, but then on the 11th, 12th, 13th, he would use it again. And then by the time they reported it on the 14th, they were reporting the balance as of that time. And I think from my memory, it was a $1,000 credit limit. So it was really kind of easy round number. So, his balance was $700. And that amounted to a 70% credit utilization, which significantly impacted his credit score. Okay, so the bottom line of this is that it's really important for you to not only know your statement date, but to make certain that the balance as of the statement date is as low as you can possibly get it. Okay, and understand that if you draw down and charge against that card between the due date and the statement date, then it's going to increase your balance, increase your credit utilization, and obviously have a negative effect on your credit score. So what you want to do is you want to contact your credit card company and just ask very, very simply, hey, so I talk to a customer service rep and say, what day of the month do you report the details of this account to the credit bureaus? And they'll tell you. And like I said, typically it's going to be 3 to 4 days after the due date. And then you just want to make certain that the day before that balance is as low as possible. If you can get it to say anywhere from 2 to 4%, that would be ideal. But even if you can't, get it as low as you can, and then you're free to use it after that until basically the next due date. Okay. Just by doing that and bringing that number down, which he could easily do, it wasn't a matter of not having the money. He just didn't really understand how it was impacting his credit. The next month, he understood what he needed to do, and the score, I think, went up 50 or 60 points just because he did not use the card between the due date and the statement date. He let that statement date come, they reported that low balance, and then he was free to use the card again. Okay, so that's what you want to do. Now, I had also fairly recently a client who had sort of the opposite situation going. She contacted me and said, hey, I'm working with this mortgage broker, and this mortgage broker has told me that I can't use my credit card during the month because it's going to negatively impact my credit score, and it might prevent me from being able to qualify to buy a home. So basically what this mortgage broker was telling this lady is that the credit bureaus would report basically the transaction activity on that card during the course of the month, so that if she used it, then everybody could see it. And let's say if she had $1,000 limit and she charged $700-800 over the course of the month, even if she paid it down by the statement date, it would still have a negative impact on her. And that is absolutely 100% not true. It is not the case. Okay, it is not the case. The credit bureaus report the details of an account typically. Now, I mean, I've heard instances where some companies have reported multiple times in a month. That's very rare, very rare, and you can find that out just by calling the credit card company and asking them. The vast majority of credit card companies report the details once a month, okay, and they report the balance as of that date. They don't report activity during the course of the month. Okay, now what they will report is they will report what the high balance has been during the life of that account. Typically, there will be a line which will say high balance, meaning that, let's say if you have $1,000 credit card and at some point it was over the limit, and let's say you charged, if the balance at some point was $1,050, and it doesn't have to be the balance as of the statement date. I mean the balance at any time, statement date or not. If the balance ever got up, whatever that high balance is, whether it was 1,050 or whether it was 50, whatever the high balance is, typically there is a line on the credit report that does show high balance. So if at some point you were over the limit, then that can be seen, but that's not going to impact your credit. Okay, your credit score, the algorithm is going to look at what your balance is as of the time that the details were reported. Okay, and the fact that you may at some point have been over the limit is not going to impact your balance, and whether you use it over the course of the month or not is not going to impact. It's not going to impact your credit score. Okay, it's only what's reported, that balance as of the statement date. That's what's important. That's what you have to make certain that you have it down as low as possible on that day. And so if you have it, if you have it down to 2% on, like in the case of my client, if he had it down to 2% as of the 14th, and that was reported on the 14th, then on the 15th, if he wants to use it again, he can use it. He can use it all the way up until basically the next due date when he would make his payment. Typically, I try to have, like in my personal credit card accounts, I have sort of like a blackout period between the due date and the statement date. I don't use them, but I have a lot of credit cards. Okay, I do. So it's not, I'll always have something available, but for each card, I keep my cards at 2% as of the statement date. So I'll pay them down. Well, really, as of the due date, I'll pay them down to 2%, and then I'll basically just not use them again until the statement date is come and gone and it's been reported, and then I can use them again. So again, that's really critically important to understand, because if you, on the statement date, if that balance relative to the credit limit is high, it will negatively impact your credit score. So a quick way to increase your score is getting that limit down. Getting that balance down, getting that credit utilization down, and you should see a significant improvement in your credit score. If you have any questions, feel free to. I'll have my email link down in the description. Feel free to drop me an email or leave a comment. If you found value in this video, please hit the like button. And if you have not yet subscribed, please consider subscribing and joining the channel, and hopefully you'll get some benefit from it. So again, thanks for watching, and I'll see you on the next video. Have a good day. Thanks.